Hello and welcome to Euro Yen Daily Trade Ideas and Analysis. Let's start with the daily chart first. Here the ABCD pattern is still in play, the one we have already discussed about in detail, and the risks and the benefits of this is still remain the same. Though we can see that according to the harmonic pattern, the time for the target to reach is either by tomorrow or by Friday. So the final target on the daily time frame has to should hopefully be reached by Friday's trading sessions. But currently you can see that the trading has been quite thin. It's been within a small range, and it has been within this bear candle range. You can see that the 3 days of trading has not exceeded this either on the bullish or the bearish side. And though we could understand that Monday and Tuesday's trading sessions were quite lean, mainly in anticipation of the FOMC meeting, which happened today. But today the market was rather thin, uh, also because of great push and pull action happening with the Euro Yen pair. The Euro USD, as you can see, if you've noticed, it's been really strong, and it has breached its long-term resistance, and it has moved above the 1.35 psychological level, and that kept the Euro Yen buoyed up. But at the same time, with the USD Yen crashing, with the dovish comments from Bernanke, uh, it could not really breach the resistances it has formed, the natural resistance it has formed around the 130 to 70 area. So though we still do not have a specific direction in place for it yet, but what it has, the last 3 days, what it has done is it has given us a clear demarcation on which side the market should move depending upon where it should break out, and it also gives us specific targets. Before we look into the targets and how to make entries, let's just have a quick look at the technical indicators. You can see that I have two moving averages over here, the 3 by 3 and the 5 by 25. So the market currently above both the moving averages, so that's a bullish sign. The stochastic is still indicating a buy. The momentum indicator is neither at overbought or oversold, but more tilted towards the buy. And the MACD, we were hoping there would be a kind of yeah, overlaps over here and shift to a bearish trend, but that hasn't happened yet. But it looks like it could happen still, because yeah, the signal and the MACD lines are quite converging right now currently. So the market is still above the weekly pivot point, and until it breaks below and opens, or closes below this support area, the bearish movement is still not confirmed. And with us in mind, let's take a look at the 4-hour chart. On the 4-hour chart, we have a classic rectangle pattern and formation over here, and we know that the rectangle pattern, do you always take the target, the height of the rectangle, and replicated in the direction of the breakout. If it breaks out over here, you have the target over here. To the downside, we have the target which is coinciding exactly on the weekly pivot support one, which is at around 130.90 area. And if it breaks out on the bullish side, you have the target at around 133.55, which is also very close to the ABCD target, which it hasn't completed yet. And we see that again it's trading above the weekly pivot point, and we have weekly pivot resistance 1 and weekly pivot support 1 in these respective areas. And just above the weekly pivot support 1 is the 618 fib support of this upward move. So we have some clear demarcations available for us, and though we had very lean trading opportunities in the last 3 days, I see a much possible last 2 days of the week where we could count on some good trading moves that we can cash on. And apart from these targets that the rectangle pattern gives us, we have other targets as well. This is the ABCD's retracement target, which is around 130 30 area. And since this has been a very strong consolidation, I do not think the market would stop after either side. Even if it's bullish or the bearish breakout, I do not believe that the market would stop at the target of the rectangle pattern. There is a strong possibility that it might continue even beyond this, and that also makes it possible that this target will be reached on the daily time frame. So watch out for the breakout tomorrow, and we could have a good break. I mean, a definite breakout in the early sessions tomorrow, and that should give us good opportunities. And looking at the hourly chart, we don't have anything significant over here yet. This is the resistance, natural resistance that is drawn over here, and you can see that the market has constantly tried to breach it, but it has contained itself well within it. Another factor about the market mechanics, when you talk about market mechanics on why these kind of resistances and supports act as strong launch pads for further moves, is because whenever the market tries to hit the resistances constantly, there is a good possibility that it's going to break sooner or later. And similarly, it has also tested the support area quite a few times, and it holds the same even for the bears. If it has to break this, then it would have a very strong propulsion to move forward. And why that happens is because when you have a ranging market, and the range traders, most of the time what they would do is yeah, they would people who are going short at 130 to 70 area would have their stops a few pips above this, and when the stops get triggered, they fuel to further action in the breakout, further continuation in the direction of the breakout. So all in all, we have a definite strategy to enter in the market in the nearest trading sessions, and we also have predetermined targets for these breakouts. I hope uh, I hope we can see some good action in the next couple of days and make up for the 3 days of lean trade sessions. Thank you, and happy trading.